Nobody wanted to be the last one holding risk when the next headline dropped. It began with fear. Futures markets had been bleeding overnight. The Dow Jones Industrial Average was pointing to a drop of over 900 points before the opening bell even rang. Oil had already climbed past $112 per barrel. Traders were glued to their screens, not because they were looking for opportunity, they were looking for an exit. The Strait of Hormuz, that narrow but critical waterway through which nearly 20% of the world's oil supply flows, had been effectively shut down for 11 days following escalating military exchanges between United States naval forces and Iranian Revolutionary Guard units in the Persian Gulf. The tension had been building for weeks, but the previous 72 hours had pushed global markets to the edge. The supply shock that had been terrorizing energy markets for nearly 2 weeks was suddenly, potentially, over. It came directly from President Donald Trump. The message was brief, characteristically blunt, and immediately world-altering. Trump announced that Pakistan, acting as a neutral diplomatic intermediary, had successfully brokered a ceasefire agreement between the United States and Iran. The Post confirmed that both sides had agreed to a 72-hour cessation of hostilities with formal negotiations to begin within 48 hours in Islamabad. Within seconds, the Post was screenshotted, shared, and verified by 3 separate wire services. The White House press office confirmed it 4 minutes later. The reaction in financial markets was instantaneous and violent, in the best possible way. The Dow Jones Industrial Average, which had been down over 600 points at the time of the post, reversed course with a ferocity that left even seasoned traders speechless. Meta's advertising revenue model is deeply sensitive to consumer confidence, and the sudden improvement in the macro outlook sent institutional money flooding back into the stock. Delta Airlines was the standout performer of the session. The airline sector had been decimated by the oil price surge, with jet fuel costs threatening to erase quarterly profits across the industry. When oil dropped $20 in a single session, the math changed completely. Delta surged 12% on April 7th alone, adding billions in market capitalization in a matter of hours. By the close of April 8th, the stock had held most of those gains, with analysts at 2 major investment banks upgrading their price targets, citing the dramatic shift in the fuel cost outlook. Intel was the second major story. The chipmaker had been under pressure for months, but the ceasefire unlocked something specific for Intel: the prospect of resumed semiconductor trade discussions with regional partners that had been frozen during the conflict escalation. Intel jumped 11% across the 2-day period, with volume running at nearly 4 times its 30-day average. The ceasefire moved the market. Whether the ceasefire holds will determine what moves it next. The ceasefire was 72 hours long. It was not a peace deal. It was not even a framework for a peace deal. It was a pause, and a fragile one. By the evening of April 7th, Israeli forces had conducted 2 additional airstrikes on targets in southern Beirut, citing what they described as imminent threats from Hezbollah positions. Iran's foreign ministry issued a statement calling the strikes a provocation and warning that its commitment to the ceasefire terms was contingent on regional actors respecting the spirit of the agreement. The language was careful, but the implication was clear. The window could close as quickly as it had opened. Then came the Federal Open Market Committee minutes released on the afternoon of April 8th. The minutes from the most recent Federal Reserve meeting painted a picture that no equity bull wanted to see. Fed officials had explicitly discussed the risk of stagflation, a toxic combination of slowing economic growth and persistent inflation, as a credible near-term scenario. The word stagflation appeared 7 times in the document. Rate cut expectations, which had briefly spiked on the ceasefire news, were dialed back sharply after the minutes dropped. The 10-year Treasury yield climbed back above 4.6%. The market closed April 8th with modest gains, but the euphoria of the previous session had clearly faded.